Let's bring in George Tsilis, senior markets correspondent here on the network. George, we're talking Mastercard. The stock up about 10-11% so far this year. Expectations starting to fall off here a little bit, but Visa's up after their earnings. It seems like people are still swiping out there.
Well, they are, and I think when you think about Visa and Mastercard, these two companies are basically behemoths when it comes down to, total payment volume and transactions volume. If you look at Visa, effectively, it's over $3 trillion in global payment volume, and you think on Mastercard, they're number two at about $2.32 trillion. These are huge numbers for these companies. Now, if you look at their respective businesses, they're not finance companies. They don't have balance sheet risk. They don't have the lending risk that essentially companies like Discover or Capital One Finance do. These are essentially transaction businesses, and they're technology companies that are extremely profitable. If you look at, for instance, Mastercard's net income, it's about 44% of sales. It's an extremely profitable company. It's got steady revenue growth in the double digits, as well as EBITDA growth that's about 400 basis points higher than sales. If you look at the numbers they're expected to report, they're gradually increasing. $3.21 is the estimate. That's about 20% higher than last year compared to $2.68. These are, again, the numbers they're expected to report, as well as about $6.53 billion in total revenue, higher by 13% compared to $5.76 from the same quarter last year. I think that these companies are just steady growers. Now, there is some, of course, pullback based upon market conditions. But if you look at the revenue growth estimates for Mastercard, they're still expecting 14% sales and about 17.5% EBITDA growth. And this company just generates a tremendous amount of profits. And I think this is one of the reasons why these companies, both Visa and Mastercard, are really stalwart investments from an institutional standpoint. And considering also market cap at around $365 billion, these are not small companies.
George, the amazing thing to me is, with as big as these companies are, the world still likes to pay a lot in cash. So there's still a lot of growth opportunities for these companies. That said, this Credit Card Competition Act of 23, did you see that? The government wants people to use others. They want to spread out some of the wealth here. Is that a threat to some of these companies, Visa and Mastercard, frankly?
Well, that's the thing. I mean, you have to think about the network that this company provides. I mean, if you think about Capital One, for instance, a credit card, they use either Visa or Mastercard's payment network. And that's where really the value is here for these two companies. I mean, there are branded credit cards across multiple providers out there. And I think just the network effects create high barriers to entry. So again, there's always they're trying to increase competition. Regulators are to some capacity, but at the same time, you have to create a better and faster network, and that takes a huge amount of capital expenditure and time to do so. So therefore, as of right now, it looks like these two companies, Visa and Mastercard, really still maintain a durable competitive advantage.
All right, great backdrop here for us, George. We're going to do an example trade. That's George Tsilis joining us, breaking down Mastercard.